Good morning, everyone, and welcome to Monday morning. It's Stephen Whiteside here from theuptrend.com. Well, last week was an interesting week. It turned out to be an inside week of the previous week, which was also an inside week. So 2 inside weeks in a row for the S&P 500 and for the NASDAQ 100. So price activity contracted last week, and we're looking for a breakout of not last week's higher low or the previous week's, but we have to go back 3 weeks, and we're looking for a breakout or a breakdown of that bar to tell us which way the market wants to go next. An inside week, just like an inside day, is a pause. It's a time of indecision where the market really doesn't know where it wants to go next. It's looking for a clue, and that clue may come this week from the Fed, which meets on Tuesday, and then of course the announcement comes out on Wednesday. Now, commodities, on the other hand, helped the TSX move up. It was up 5 days in a row last week and traded right back up to previous resistance. And you can see that this level has held us in check all year. We were able to trade slightly above it back in the start of the year, and we're going to be looking to see if we can take out the early 2023 highs, and that would open up a move up to 21,250 on the TSX. Looking at the VIX, it was down slightly on the week. It's still on a weekly sell signal that is supportive for the market going higher on a long-term basis. That would change this coming Friday if the VIX were to close above $16.70. Now, if you're trading the market on Monday, we're looking for the VIX to close above $14.67. It made a new low on Friday, then it reversed and closed higher on the day back in the channel. We did see some selling in the U.S. markets on Friday. Now, if the stock market is going to have a major correction in September or October, as these are seasonally weak times for the stock market historically, we're going to need to see the VIX start breaking out above the 200-day moving average, and that's what held us in check back in August. And so far, we're nowhere near that level. We're still trading below the 150-day moving averages. So the options market is not overly concerned about the stock market going forward at this time. Now, what might not be good for the stock market right now is the U.S. dollar index continues to move higher. We also saw bond yields move up last week, and so that open gap is not holding us in check any longer. We are now trading above it, and so the trend for bond yields and interest rates is still pointing higher. Now, everybody's expecting the Fed to pause. I'm not sure they should, given the fact that inflation is still out of control for a lot of people. Of course, their models do not directly reflect how the consumers have to deal with inflation. But we saw crude oil continue to move up last week, up another 3 and nearly 0.5%, 3.45% on the week. And so we're continuing to move higher on crude oil. Now, the price of gold also moved up last week, just $3.50, but that was enough to help the Canadian stock market. We also saw the price of silver, which reversed on the week, had a bullish reversal week, and closed higher on the week. So both of those commodities helped the Canadian stock market move higher. Now, speaking of inflation, we saw live cattle make a new high last week. We also saw a new high for cocoa. We also saw a new high for frozen orange juice and for the price of sugar. So it's pretty obvious that some commodity traders haven't got the memo from the Fed to help fight inflation. Now, on the other hand, wheat traders have been very supportive of the Fed, and we made a new low for wheat on Friday. Remember when Russia invaded Ukraine, the price of wheat popped dramatically as the world was concerned about the global wheat market being disrupted by the war in Ukraine. All of those fears have seemed to have dissipated and not really an issue at the moment. Now, looking at the seasonality chart for the S&P 500, you can see that we historically peak in the middle of the month and sell off going into the end of the month. Did that start on Friday? Well, only time will tell, and this week may start out quiet, but it may end rather violently, either to the upside or to the downside, depending on what the Fed does on Wednesday. Now, what didn't work last week? Well, in the U.S. market, it was home builders back on a weekly sell signal. We had biotechs down last week, so they've been on a sell signal for a few months now, and semiconductors have been on a sell signal for over a month. And then we've got industrials on the second week of a sell signal for industrials. What worked? Well, on the Canadian market, it was base metals were up nicely, followed by marijuana stocks. Marijuana stocks not a big component of the Canadian stock market. And then we've got utilities up nicely, almost trading up to the upper channel line. So we don't have far to go to generate a weekly buy signal for utilities. And then we've got information technology, which was up just under 1% on the week. Now, looking at the energy sector, energy stocks on this side of the border moved up last week, and we're stuck here, trapped, holding on to the 1719 level. We're trying to break out above the high from early 2022, so that's holding us in check right now. If we can start breaking out above that high, then 1875 comes into play for the XEG. Now, looking at the XLE in New York, we did make a new high for this move last week before pulling back just 4 cents. We're trying to break through the 93.75 level, which has held us in check in 2022. And we got as high as 93.69. So getting pretty close to that 93.75 level. If we can take that out, then $100 does come into play. Or resistance could do what it's supposed to do, which is hold us in check. And this might be the time and place where energy stocks start to top out. Let's finish off today's presentation looking at some numbers for Monday, and we've already looked at the VIX. The iShares for the TSX 60 up 5 days in a row last week, and we need a close below $30.56 on Monday. Not expecting that to happen, of course, and that lower channel line is going to continue to move higher daily. Well, where did we end the day on Friday? Well, our next price target was 31.25, and we closed at 31.25. Now, if we can move higher from here, then 31.64 is our next price target. Now, the S&P 500 ended Friday on a sell signal, and so we're coming into Monday with a new sell signal for the S&P 500. Things would change on Monday with a close above $448.51 for the SPY. In the pre-market this morning, we are trading lower. Looking at our price targets, you can see that 453.13 held us in check in the month of August, and now we're going to look to see if 437.50 can act as support in the month of September. Then looking at the NASDAQ 100, the triple Qs ended Friday on a sell signal, looking for a close on Monday above 376.23. Not expecting that to happen from what we're seeing in the pre-market this morning. Now we're starting to move down from 375. We haven't really broken away from it just yet. The high on Friday was 376.32, so we haven't broken away. If we start to break down below the previous week's low, then 359.38 would be our next target to the downside for the triple Qs. Then looking at semiconductors starting to close just below the $200 level. If we take out the August lows, then 187.50 is our next price target for the semiconductor ETF, which is the XSD. Okay, folks, that is all for this morning's presentation. Expecting to see a little selling at the open. At the same time, commodity prices are moving up slightly on Monday morning. Have a great day. Next time you'll hear my voice is on Tuesday morning.